Capital gains tax is a tax that not a lot of people know about in the UK, but it's a tax that can creep up with you, especially if you're investing and it's not in a tax efficient wrapper like an ISA. So if you invest in a GIA, you need to know about capital gains tax. Capital gains tax is the tax that you have to pay when you dispose of assets and make a profit. Capital gains tax, tax on the capital that you've gained. It's in the name. From an investment's perspective, if you've bought shares, stocks, bonds, whatever it is, and you've held them and they have increased in value and then you sell them, you have to pay tax on the profit that you've made from that sale. Capital gains tax is also due on the disposal of personal possessions if it's worth more than £6,000, excluding your car that's in your name that you drive. It's also due on properties, excluding your main property unless that main property was rented out or used for business purposes. And it's also due on business assets. Now, everyone has what's known as a capital gains allowance, which means that you can make up to £3,000 in capital gains before you're taxed a penny through capital gains tax. One thing about capital gains, though, is if you've made a capital loss, i.e. you've disposed of an asset and made a loss on it, you can carry that loss forward to add on top of your capital gains allowance so that you don't have capital gains to pay, or can at least reduce your capital gains liability by the loss that you had previously. Now, if you've invested in a stocks and shares ISA or an SIPP, then you don't need to worry about capital gains tax at all. However, if you were above your stocks and shares ISA limit and you've invested in a GIA and your gains are more than £3,000 in a tax year, then the chances are you will have to pay capital gains tax once you dispose of those assets and materialize your gains. Capital gains tax shouldn't just be understood from the perspective of investing in the stock market. If you invest in anything, if you buy something low and you sell it high and you make a profit, you need to understand about capital gains tax. If you're a basic rate taxpayer, the capital gains you will be charged is typically 18%. For higher and additional rate taxpayers, your capital gains tax charge will be 24%. That pretty much covers the basics for capital gains tax as an investor. Congratulations on completing day 22 of 30 investing terms that you should know. And I will see you guys tomorrow for our next lesson.